As you guys already know, I'm not a financial advisor or a financial planner, so always come to your own conclusions, do your own research, and know what you are investing in, know the possible reward, the possible risk. That is very important here, but I do think the reward much outweighs the risk here, and we're going to go over everything that I am looking at that is signifying to me that we are getting very close to the short squeeze. So I'm going to save you guys the spiel of what we're going to be looking at. We're just going to dive right into it. The only thing that I ask is that you hit that like button for me, comment down below, consider subscribing to the channel if you like the content that was provided to you in this video. I do greatly appreciate it. Now, first and foremost, guys, as you already know, unless you invested in AMC on like Friday and you haven't watched a lot of these videos, you know the technical analysis is very bullish. Now, let me just give you guys one of the biggest factors that I'm looking for that will 100% signal to you we are about to see the short squeeze. No matter how this plays out, this is one factor that will be a telltale sign of what is to come, and that is you will expect an increase of volume, because obviously look at this stair step like motion from about $12. Literally every single day you've seen an uptick in volume. Besides about 2 days right here, you've seen the stair step down motion, and then you see that huge indication of volume. Now, if you would have made a trade right here at about $25 even to $30, obviously you would be really up on your position, especially if you were playing options. So I am expecting that volume to start increasing like we did see on Thursday. We only seen 57 million in volume. On Friday we see 90 million in volume, and even as the German markets were open today, they seen a lot of volume, but AMC even went up 3.51%. Now, there's a lot less liquidity on the German markets, and we do see this effect, right, once you're closed on the US markets, whether it's a holiday or whatever the case is, you do see that price impact from the German markets tend to lead over into the American markets, but on a bigger magnitude. I wouldn't be surprised if we see an in between 5 to 10% positive day on AMC stock. But revolving back to the technical analysis, when you do see these huge volume intakes, you're obviously going to see the price go up. Usually 9 times out of 10, when you see a lot of volume, you see the price go up. Once you see that volume pull back, you see the price pull back, and we have had this small pullback, right, from about $72.62. This does indicate that was the close on June 2nd. We have been consolidating in between about 50, really $55 and $60 being a major resistance level. But we have seen about a 14-fold decrease from our highest volume day to our lowest volume day, and the price has held up phenomenally well, indicating that apes are not selling their positions. The majority owners, you and me, we're not selling our positions. We are the main driving factor of this whole short squeeze. Now, besides the technicals, we also have to acknowledge the fundamental valuation of AMC. There is big movies coming to theaters, including F9 that just passed, Fast and Furious 9. I'm sure a lot of you guys went to the theaters and seen that. We've seen a ton of revenue being generated at AMC alone because of that movie. Now, on this Friday, July 9th, we are seeing Black Widow hitting theaters along with a lot of other blockbuster movies. Look at this: LeBron James, Space Jam, A New Legacy, Internals, Marvel, Black Widow, obviously we just talked about, Ghostbusters, Halloween Kills, that's later into the year, Spider-Man. We're seeing a lot of blockbuster movies that are going to be hitting theaters, and the Suicide Squad. All these are going to be huge movies. They're going to help boost AMC's numbers up and help justifiably value AMC at a higher price than these analysts think, or that Wall Street is pricing in. That is the huge thing here. If we can upset to the upside and get higher revenue numbers, more people going to theaters, that will surprise the pricing factors and the algorithmic trading of the stock market and make the price go up in and of itself, regardless of shorts or anything else that is in the stock. But the key factor is if all apes do hold their positions, or a majority of apes hold their positions. Now, the second thing that I'm watching is that AMC is on the threshold securities list. Now, you guys have already seen this. If you don't know, that is when for 5 consecutive days a stock has at least 10,000 shares or more and equal to at least 0.5% of the issue's total shares outstanding that are failed to deliver. Now, this happens with options and with naked shorting with a lot of market maker activities, but this is most known with naked short selling. Now, what happens when you are on this threshold security list? Well, when the stock is on this list, each hedge fund or institution or brokerage or clearing firm, whoever it is that is short on these shares, they cannot do anything else with AMC stock, they have to cover their short positions. Now, contrary to popular belief, you actually have about 35 days to cover these fail to deliver shares. That is, I believe, section 206 of the SEC filing that does revolve around naked short selling. I would pull it up, but there's a lot to go over in this video. You guys can check that out yourself. It's pretty simple to find, but they do have 35 days if the shares for some reason are hard to find or unable to be acquired. So I do think personally within the next about 30 to even 60 days, we should definitely be seeing this short squeeze. But like I said, we are already seeing signs of this happening. So right here, we do know that there is a lot of shares, at least 0.5% of the total shares that do need to be bought back. And considering we own about 80 to 90% of all shares outstanding, 0.5% of the shares is a big number, guys. Don't underestimate that. That is a large number. That now this could be even higher as we have not got the failure to deliver numbers. I believe the cutoff was June 1st, so right when we started to rally was the cutoff date. The SEC actually published these numbers, so we'll have a better idea of exactly what these numbers do look like going into the future. But we also do have the reverse repo market, guys. This is at an extraordinary all-time high. We have not seen anything like this since the start of the reverse repos, and this is essentially where you can imagine it like hedge funds, institutions that have to put up more cash to stay in their AMC short positions. They're putting up this cash, they're giving it to the banks that have the debt with the hedge funds and institutions. Think back to Archegos, 8 times leverage. Morgan Stanley took a huge loss in that. So it's ultimately the banks that are behind this. Once hedge funds, institutions, like I said, start to deposit more cash, the banks can't sit with that cash. Think about it like a savings account. If you deposit money in a bank, you're going to get paid. I don't even know what the rate is. I don't have a savings account. I would rather invest my money in the stock market, specifically AMC and other stocks. But let's say it's about 0.5%. Now, if there's a huge influx of cash all of a sudden, then the banks can't keep that cash on their balance sheet. And a lot of this, like I said, is coming from hedge funds and institutions very rapidly, and literally correlates to when we started to see meme stocks, momentum stocks start to rally in price. Now, specifically when we started to rally was about April 30th. Now, when we did hit, I'm trying to get to the exact date, June 1st was about when AMC started to rally. We are more than double where we were at June 1st. So you see a lot of money going into this, currently at almost $1 trillion. Now, like I said, they put up this cash. It's a liability on the bank's balance sheet because they have to pay interest on this cash. They give it to the Fed and they get paid 0.05% interest, or 0.15% interest on this cash that they do give to the banks, or the Federal Reserve, which is a bank, but the main bank of the banks. Now, when they do that, it takes a lot of the liability off their balance sheet. So that's why they're doing this. But the Fed could say, yeah, we're not taking all this cash anymore. It's too much risk for you guys. There's an issue going on in the system. Now, they accept these on a daily basis. They don't have to accept all of these. So that is one key factor that I'm looking at as well, is the Federal Reserve actually stepping in and saying, hey, we're not going to accept these anymore. This is too much for even us to handle, and you guys need to figure out what to do with this cash, and obviously force liquidate on positions to give some of them sweet tendies back to the people that are rightfully deserving of them, that has been squeezing these hedge funds and institutions. Now, we also have to acknowledge the Fintel data, and I did pay a decent amount of money to get at the full list and access to this information. Now, if you guys want to check that out yourself, it is Fintel. You can monitor this on a daily basis, and this basically tracks the SEC filings of all different funds, hedge funds, institutions that have short positions on AMC, or you can even look at the longs of AMC. You can look at everything you want as far as the data on Fintel. So I do recommend you guys check that out. But we are not seeing shorts actually covering their short positions. We are actually seeing more shorts doubling down. These are the green lines, but we are seeing some bigger guys like Citadel, Jane Street Group, with Citadel has 5.7 million shares that are sold short at $6.16. Jane Street Group, LLC, they do have shares that were sold short at $6.16 as well, and they do have 4.7 million shares that were sold short. And then you see a couple million here and there, a couple 100,000 here and there, but you're seeing the larger firms that are able to stay in their short positions, while some of the smaller firms are actually selling out. So I do expect once you do get close to the short squeeze, or even right after, you're gonna see this being reflected in the Fintel data, which we are seeing the exact opposite. We are seeing shorts actually actually doubling down on their short positions. But as well as that, we also see this increase in options activity. We are seeing on the low end about 150,000 contracts obviously in the money and out the money put together, and on the higher end about 350,000 contracts. Now where this is significant is because obviously once you do get closer to the actual strike price that these contracts are being bought and sold, I'm just going to break it down to you guys in the simplest terms as possible when it does come to a short or a gamma squeeze, not a short squeeze, a gamma squeeze. They are very different. Now, and this can be a bit of a warning to a lot of you guys that are essentially giving the hedge funds free money to not cover their short positions. Now, when people are buying super far out the money contracts or even slightly further out the money contracts, let's say $65. You're buying a $65 strike, and this is not really one that I would be too concerned about if you were buying this. I think this is better than obviously buying the 70, 80, 90, 100, or even 145. But let's just say the 65. So you are buying this for $309 right at the money. You would probably get filled right at this price. So you are giving this $309 straight to, most of the time, market makers. Some people obviously do cover calls, and that is agreeing to sell your shares at that strike price where you would give that money to that person. But in order to keep the option market fluid and you can always go in there and buy a call or sell a cover call, that is where market makers come in, and that is the main purpose of this. So you are giving this $309 to the market makers like Citadel, and if AMC doesn't get close to $65, they're not going to hedge for these positions. I would even say right now, when AMC is at $52.94, they are not hedging whatsoever for these $65 calls. So the closer you do get to the $65 strike, obviously they will start to hedge, but they're not going to start to hedge until about $62, $63, $64 dollars. So you're essentially giving them free money, and there's no guarantee they will have to buy any shares to hedge their positions. Because if you guys are unfamiliar, when you're buying a call, you're buying the right to buy 100 shares at this strike price. So $65 by this date. When the market makers are on the other side of this, they're agreeing to sell you 100 shares at $65 for this example. Now, why would they buy shares at $52.94 if they don't know if it's going to go to $65? They don't know this. They're not going to buy the shares. They're only going to buy the shares once it does start to get close to that price. So that's why you see a lot of delta hedging that is going on. That is essentially how you get a gamma squeeze, and that is the simplest way to break it down for anybody. It goes a little bit more in depth with that, but that is the general concept here. So essentially, when you are buying really the 100 to 145s, you're giving the hedge funds, institutions free money to essentially just keep and not have to cover their short positions even faster. Think about it. If they're making 50 million a day or 20 million a day, whatever the number is, just by being the market maker in these trades and they're expiring worthless, do you think they're really going to cover their short positions? I don't think so. They're going to drag this out as much as possible. So that's not a recommendation, but I do like $65 to $60 strikes, or I should say $60 to $65 strikes, if not even in the 50s. I do like those as well, and that is ultimately helping the gamma squeeze potential here. But the last and final thing, obviously this is self-explanatory, is you're going to see the Ortex data showing the short interest going down as the share price is going up. Not like we have seen in the past where the short interest goes down on really red days where the stock is going down 10%, you're seeing the short interest go down 4 or 5%. That is not the indication of the short squeeze. It'll be the opposite, where the short interest is going down, but you're seeing AMC's share price going up 20, 50, 100%, 500% in a single day. No telling how high it's going to go. That is why it is important to do your own research and come to your own conclusions. But that is the biggest things that I am really looking forward to. We covered a lot in this video, so if you guys want more videos like this, hit that like button for me, comment down below, consider subscribing to the channel, like I said, for more videos like this. Check out the links down below in the description. There is a link for public, no deposit necessary, no need to even link a bank account. They do not route your order flows to companies like Citadel as well. It goes straight to a lit exchange. You get the best pricing possible, and you would get your free stock in about 3 minutes time. Like I said, no deposit necessary, no need to link a bank account, so it is by definition free money, as well as if you guys are not signed up with Webull, deposit $100, get 4 free stocks, each of them potentially worth up to $2,400 for a limited time only. Now, there's also a setting in Webull where you can disable the availability for Webull to lend your shares out to other hedge funds or institutions without you knowing about it. So that is why I do have those 2 links. I think they ultimately are a great thing for the ape movement overall. You get free stock with both of them, can't go wrong. But if you want to start winning on your option trades as well as long-term investments and crypto trades, check out the link down below for the buy and sell alerts. There's about 40 members over there strong, a little bit more than that now, but we are killing it on a daily basis, so check that out. I look forward to seeing you guys over there on that and just becoming a part of this channel. I do love and appreciate every single one of you guys. But with that being said, get ready for trading tomorrow and going throughout the rest of the week. It is going to get crazy. Get ready, guys. You're gonna have a lot of ups, you're gonna have potentially a lot of downs. Just get ready for this. Now, that is gonna be all for this video. I will see you guys in the next one.